Hey everyone, welcome back to the channel. In today's video, we're diving into a topic that's been on everyone's mind lately, crypto. If you've been following the market, you know things aren't looking too hot. But here's the kicker, this crypto crash. It's just getting started. That's right. Stick around because I'm going to break down why things are about to get even worse for the crypto space. Let's jump right in. Let's start by taking a step back and looking at where we are right now. Bitcoin, Ethereum, and other major coins have been on a downward spiral for months. In fact, we're seeing market drops that are reminiscent of the 2018 crash. If you haven't noticed, the market has been highly volatile, with sharp drops happening almost every week. Just last week, we saw Bitcoin drop under $20,000 for the first time in ages. Now, that's not a small dip, and it's just the beginning. So, what's going on? Why are we seeing these massive crashes, and why do I think it's just the start? 2. The fundamentals are crumbling. First off, let's talk fundamentals. One of the main reasons we're seeing this crash is because the entire financial ecosystem that crypto relies on is starting to crumble. We're talking about rising interest rates, tightening global economies, and inflation that's affecting everything. Crypto has always been a risky investment, and when traditional markets get shaky, people pull their money out of riskier assets. Investors are looking for safety, and crypto is anything but that right now. We're seeing that sentiment reflected in prices. But here's the real problem: crypto was already overvalued. A lot of these projects were speculative, based on hype and not real-world utility. With inflation eating into budgets and global economies slowing down, investors are now questioning the true value of most crypto assets. 3. The end of easy money. Now, let's talk about the end of easy money. When things were going well in the crypto market, it was easy to make profits. The bull run was fueled by cheap money, low interest rates, and a lot of hype from retail investors. But now, the party's over. With central banks raising interest rates to fight inflation, the cheap money that helped pump up these valuations is disappearing. And here's the scary part: the people who got in during the hype. They're sitting on massive losses. The correction we're seeing now is just a symptom of the underlying issues. The easy gains are gone, and without them, there's not much left to hold the market up. 4. Regulation and scrutiny are coming. Now, let's talk about regulation. Governments around the world are waking up to the fact that crypto is no longer just some wild, speculative asset. It's becoming too big to ignore. But with that, comes the scrutiny. We're already seeing moves towards stricter regulations in places like the US and Europe. Why is this a big deal? Because regulation means less freedom. It means more oversight, more compliance, and ultimately, less room for these projects to grow without restrictions. It's likely that some of the biggest projects out there will get hit with massive regulatory hurdles, and that's going to hurt prices. We're talking about more legal battles, more restrictions on exchanges, and more uncertainty in the space. We've already seen this play out with big names like Binance and Coinbase being investigated, and as more regulatory pressure mounts, things will get even harder for the market. 5. Sentiment is shifting. Sentiment is shifting, and that's something we cannot ignore. Retail investors are pulling back, institutional investors are hesitating, and there's a growing sense of doubt around the long-term viability of crypto. It's easy to get caught up in the excitement when things are going well, but once the market starts turning, fear takes over. And when fear takes over, people sell. We've seen that happen over the past few months, and I believe it's going to get worse. FOMO, fear of missing out, is being replaced with FUD, fear, uncertainty, and doubt, and once that kicks in, the damage can be deep. What happens next? More panic selling. And that's not a good recipe for a recovery anytime soon. 6. The bottom is still far. Now, I know some of you are thinking, this is just another dip. It'll bounce back. But I'm here to tell you that the bottom is still a long way off. The market is still correcting from years of speculative growth, and we haven't hit the true bottom yet. Just look at previous crashes. In 2018, we saw Bitcoin drop from $20,000 to just $3,000. A drop that deep didn't happen overnight. It took time, and the market had to go through a lengthy recovery period. The same is true here. We could easily see more months of pain, more volatility, and more uncertainty before we hit the bottom. The reality is, we haven't even seen the full effects of the economic downturn and regulatory changes play out yet. 7. What you should do now. So, what should you do now? If you're holding crypto, you need to ask yourself, is this a long-term investment, or am I just hoping for a quick rebound? The truth is, there's a lot of uncertainty, and we don't know where the bottom is. If you're not in the market yet, you might want to wait and see how things shake out. Sure, prices are low, but remember, things can always get lower. The best strategy right now is to stay informed, make smart decisions, and avoid the temptation to buy into every dip. Don't get caught up in the hype. Crypto's future is still uncertain, and you don't want to end up holding the bag when this crash finally plays out. That's all I've got for today, folks. I know it's tough to hear, but the crypto market has a long way to go before it sees any real recovery. Let me know what you think in the comments. Are you holding, or are you cutting your losses? Don't forget to like and subscribe for more updates. Stay safe out there, and I'll see you in the next video.